Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on out there? It's July 11th. I'm Frank Curzio, it's the Wall Street Unplugged Pie Store. I break down headlines and... tell you what's really moving these markets. You guys know, just recently moved into my new home. And for the first time, I got a Ring bell installed. And the Ring allows you to see who's coming to the door, videotapes it, and it sends alerts to your phone as someone is actually walking up to your door, which is pretty cool. And even if you don't have a Ring doorbell, most of you know how it works. Well, probably heard about it. It's Shark Tank, where it was originally pitched and turned down by all the sharks, which include Mark Cuban and Kevin O'Leary. And, you know, to their credit, the guy, I think he won something like $700,000 for 10% of the company, right? So the valuation was really insane at the time. And I don't think it was growing as fast. But little did they know, a few years later, Amazon bought the company for $1 billion and it's probably worth at least 10, 15 times that right now. You also probably saw commercials about it. If you're on social media, people post when someone trips on the steps or slides on the ice or different things, and, you know, on Reels, TikTok, and things like that. So I know a lot of you are familiar with it. But what you may not be familiar with is Ring has something called Ring Community, where your neighbors post things that they think are relevant. And you're going to get alerted to. This includes all videos and everything and posts and stuff like that. And it sounds cool when you think about it, because, well, it's a community. We're all together. We're helping each other out. You know, if a car gets stolen in your neighborhood, you want to be alerted. A stranger trying to open doors in the neighborhood, you want to get alerted. However, the default setting on this thing is like a 5-mile radius. I'm not sure if you really know how big that is, but take a major city like Baltimore. 5-mile radius will include an area where there's $10, $20 million mansions and an area where there's a 6% chance that you'll get kidnapped and nobody will hear from you again. So imagine the feedback that you're getting. So anyone with a Ring doorbell, anyone, doesn't matter, doesn't look at the background, who you are, whatever, can post within that radius. So I have alerts set up, and you have to see what people post on this thing. I mean, it's, hey, my dog is missing. Did anyone see it? And 10 minutes later, they're like, forget it, he's in my yard. And, you know, you see the camera and the yard's fenced in, so I guess you forgot you let your dog out. Or someone posted, this strange person is walking through the neighborhood. Watch out, older man. Walking slowly. Looks very shady. And this person actually lives in a neighborhood and he's 80. Of course he's walking slow. I have to get hip surgery in about 3 weeks. I walk slow. I'm 51. And they're posting, watch out, this guy looks shady. The poor guy's trying to get a little exercise. Everyone in the neighborhood now thinks he's a stalker. But the other morning, things got real. Because one person reported hearing gunshots. He's like, I hear gunshots, 3 rounds. Did anyone see anything? Another person's like, yeah, I heard 2 gunshots. Another person's like, did anyone see the cops? Anyone hear sirens? Is anyone coming? It was July 3rd, the day before the 4th of July. Kids were lighting off fireworks. Okay, in Florida, fireworks are legal. Not in New York, they're not legal. In Florida, they have them everywhere. They have them in every grocery store, every Home Depot, every Walmart. They have them every place. People sell on the side of roads like Christmas trees. They're everywhere. They're like, gunshots, watch out, gunshots. And people are glued to this camera outside their house, analyzing every single person that passes by, and think they're shady, they're going to send an alert, which goes out to hundreds and hundreds of people, depending on how big that radius is. So again, you get alerts to your phone. And for me, I don't want to shut it off because it's entertaining as hell. I actually expanded my range to 15 miles. I mean, you have to see the shit that gets posted. Bear just ate someone's cat. You see the missing grandma, missing for 3 days. Anyone see her? I'm like, it's your grandma. It's the first time they reported. I mean, she's probably a little hungry. 3 days. Like, you notice 3 days before she's missing, but you have to see it. And it's, people just look at this Ring thing all day. It's like a social media channel. It's actually awesome. Holy cow. I don't think that was intended. Kind of like Viagra, right? When you saw it was intended for something else, and all of a sudden, thousands of men are like, we need more. You're like, wait, what's going on? You know, you figure it out. I mean, that's a big part of this ecosystem. It's not just the Ring doorbell. It's cool to see and you get the alerts. But that community, people love it. Holy cow, it's entertaining as hell. It's entertaining as hell. See everything. And anyone who owns Airbnb knows exactly what I'm talking about, because they're going to want to see that person that goes into their house. Because I'm going to Saratoga opening day. an Airbnb with 4 of my friends. I was thinking of taking my shirt off and walking in my underwear. So imagine seeing that, because they all have the ring set up and they're all looking at that. Oh, I got to see these people coming into my house. I just want to go in there and probably just hire like 50 people to come in with me. Imagine that. They'd be like, you got to get out of the house. Everybody does that. But Ring, what an awesome business. And those unintended consequences sometimes when you're like, wow, this is actually pretty good, this Ring neighborhood thing. And it sounds cool and they pitch it cool, but until you have it and you realize how crazy people are posting on it, it's entertaining as hell. Anyway, I had to tell you that story. I'm probably going to get a ton of Ring stories now because, again, it's awesome. But today, I'd like to report there's absolutely nothing going on in the markets today. Nothing. Okay, that's why CNBC keeps reporting about the executives from PGA and LIV tours are testifying in a special Senate hearing. Okay, this isn't a hearing being conducted by the DOJ or the FTC about the combined tour being 100% a monopoly, which it is. It's not about that. It's just a special hearing. There's no fucking reason for anyone to be at this thing or to hold this. I have no idea why they hold it all. It's 2 private companies looking to merge, but our senators want the opportunity to grandstand, give the PGA shit for doing a deal with the Saudis after, basically getting the woke media after these guys of how terrible. So everyone, whole Saudi Arabia, the South Fund, everybody's a terrorist. Everyone. This is terrible. How could you do this? Even though the Saudis is the number 1 funder of the women's tour, nobody wants to talk about it. Even though we buy 7% of our oil from the Saudis, we could do business, right? It's so funny how we talk out both sides of our mouth. The hypocrisy is unbelievable. How could you do this deal? And in the meantime, it's with China, right? And the NBA in China. The NBA has to do, it's one of the biggest markets. It's massive. And we hate their government. I'm sure they hate our government, but the people there are pretty cool and they love the NBA. But just say that. Just say, hey, we're doing this deal because the Saudis have a shitload of money. We can't stop them. They're paying these people $100 million, our best players $100 million over 5 years, even though nobody shows up to these things. And they're going to pay this for another 7 years to lose as much money, unlimited amount. We can't compete with that. And the PGA is awesome because did you see the purses, what they raised them to? They raised them tremendously ever since the LIV tour was established. Then you got these guys at LIV, just forget it. I mean, what a joke. And competition is good for everyone. And a lot of this happened because the PGA didn't want to pay their tour players enough money. Compared to the percentage that players get paid in every sport, it was significantly lower. So who started this? Phil Mickelson. What did they do with Phil Mickelson? They threw him under the bus, and the bus ran him over back and forth 5 times. That's what they did to that poor guy. You're doing it with the Saudis, the interviews. Man, they tried to destroy that guy, and they kind of did, right, for going to LIV tour. Yet he was just like, he knows the business better than everyone. And he makes a lot of money, and you can say, well, that's, he's got a lot of endorsements and stuff, but he was pissed off and saying, this isn't right, though. These purses should be higher. Now they're higher, and now what does the PGA want to do? They want to merge with LIV. Just say, hey, it's for the freaking money. We're all going to be filthy rich when we do this. They have a lot of money. They can do whatever we want. It's awesome. Just say it. Don't go there and say, oh, well, we made a mistake. Not everyone's a terrorist or whatever. It's all this grandstanding. It's all part of a whole package where, these senators all want to get lobbying dollars and money and be a part of it. I mean, again, this isn't the FTC. This isn't a DOJ. This isn't like, is this deal fair? Again, it's not even going to matter. It's private companies and they're going to let it go through. But yet, we're not talking about Microsoft and Activision. Is that a joke that deal's not going through? Holy cow. That's one of the things I love about Kramer. Everybody criticizes Kramer. They hate him. But I tell you, when he comes on at 9 o'clock slot, he always says something that is exciting or challenges. Again, people have problems with his picks and back and forth and then COVID. Again, I don't agree with everything he says, but right away he's like, is this about the FTC? And they're like, no. He's like, oh, because the girl's running the FTC. I mean, she won't approve. 2 people in a room, she's not going to approve it. And he's right. Right away that sparks like, Faber telling him that, oh, well, I wouldn't say that and whatever. But it's cool, like the controversy. But he says what's on his mind, and sometimes that's what you want to hear. But how's that deal not going through? It's crazy that it's not going through. And the lobbying behind and just the secret backdoor meetings of not pushing that deal through, whether it's Europe, whether it's here, it's amazing. That deal has to go through. It has to go through. They're worried about them controlling a lot of the cloud market. Anyone can get into cloud in terms of gaming. Are you kidding me? You know how many gaming platforms there are? There's tons of them. Just talking about the Sony PlayStation and the gaming companies and Nintendo and Take-Two Interactive and EA Sports and all the online games and apps and stuff like that. Come on, give me a break. World of Warcraft, then the metaverse are all like gaming platforms as well. You're really not going to approve this deal? This deal should go through, no problem, no problem. They had concessions and they've met them and they're still not approving it, but come on. Instead, you have this on TV and talking about it. That's how you know there's nothing really going on. Because this is meaningless. It shouldn't even be a meeting. It's a Saturday hearing. The president even took time to do that. They couldn't take time to really, come back from vacation and get the debt ceiling done. But this is important. We got to get out there. We got to, have this special Senate meeting. Now, the rest of the week, pay close attention to. Got the CPI tomorrow. The CPI and also the core, which excludes food and energy, expects to rise 0.3%, with core inflation expected to be up year over year. You know how much? 5%. That's insane. You know how high that is in inflation? I explained this before. We've never, on an annual basis, before last year, we've never been above 4% in annual inflation, dating back to 1991. So we're at 5%. We're cheering it's below 9%, and everyone's looking for a much better number. Expectations. Tom Lee went on. Got to give him credit. He's been right about this rally. A lot of people expect a lower number. Showing inflation is moderating. That's a better number, right? I think we get that. Used car sales have gone down. Energy pulled back last month. Although gasoline prices, I don't know if you've seen them lately. And I'd like to know and hear from you guys. I know a lot about gasoline prices. One, I drive an hour to work from my office. I haven't moved it by the house that I moved in yet. So I probably drive by 10 different gas stations. And sometimes I see some of them like, you got to be a joke. And the one by our house happens to be the cheapest all the time. It was $3.05 a week ago for a gallon of gas. It's $3.45 now, a week ago. I've never seen prices move up or down that fast. It didn't really go straight down, right? It went from $3.50, $30 to $20 over like probably a month and a half. In 1 week, $3.05, $3.45. I'm like, is it this, I was wondering if it was just this place, and it wasn't. The gas stations that I pass, and as I get closer to my office, a lot of gas stations around as I'm driving, $3.45. That's a big difference. So the energy component last month in June is going to show any prices came down. And so, yes, I see a positive CPI number tomorrow. You got some favorable dynamics going on, but that will not be the case next month when we report July data. So that's the data going on this week, which is set of energy prices. That's not being reported in the number you're going to see tomorrow. This is the June number. Again, oil prices have moved up significantly. Hotel prices are still surging. I know because I follow this industry and recommend another company within this area. We've done very, very well being early to party. Food prices, not much moderation, but home prices are now back at all-time highs. Going up every month since January. We talked about this a lot. Housing, real estate, including rents, a big component of CPI. Why? Because the government manipulated that over the past 27 years to make sure that we'll never see inflation, ever. So we didn't see inflation. Well, based on the CPI, there was no inflation from 2010 to 2020, right? There's no inflation. It was below 2% on average, right? There's no inflation. We all saw massive inflation during that time, but according to what they report, there wasn't a lot of inflation. Why? Because they made rental income account for a massive part. And even rentals, if you look back the past 50 years, they don't go up fast year over year. They didn't even go up that fast or that crazy during 2005, 2006, 2007, when we saw the big housing boom, when prices were going up 20%, rental incomes were not going up that much. Check the data. So like, okay, let's construct this where, how do we keep, and why would they do that? Because it's in their favor as a politician to have the economy do well. And the economy does well when you have low interest rates. And you had a period of 10, 12 years with zero rates, unprecedented in our history. But that's great. It allows constant spending. It allows you to spend over that 10-year period $5 trillion on climate change. $5 trillion. $5 trillion over that 10-year period to watch fossil fuel usage go from what? 85% to 83%? $5 trillion. Think about what you could do with that money. In terms of border safety, in terms of kids at school and putting 3, 4, 5 security cops at schools for shootings and stuff like that. Think about what you could do. $5 trillion. You're allowed to do that when you have zero interest rates, pedal to the metal, everything going great. But now, with rental income, and people saying, well, it's coming down. You think rental income is going to come down with home prices going higher? And nobody predicted this. Nobody predicted that rates would go from 3 to 7% and you'd see home prices go higher? Nobody. So now you're seeing this, and yes, it's a supply shock or whatever, but you really think rentals are going to come down? There's a supply shock in houses. I mean, rentals, they're not going to come down. And now that's going to come back to bite them in the ass. It's why the Fed is like, look, we have this hawkish pause and we're going to raise 2 more times going forward, but not right now. Well, July, in a couple of weeks, going to say, I mean, they're raising. I don't care what the number is tomorrow. They're raising because inflation is going to go a lot higher going forward. And they need to control it. They're not going to raise twice. They're going to raise 3 times. It's either going to be a 50%, it's going to be a 25% raise in July. And then they got 3 other meetings to do this to the end of the year. And you're either going to see a 50 basis, maybe they skip and do 50, or they do 25 and 25. Because you're going to see inflation go a lot higher. We saw it in the UK. We're going to see it in other places. We're seeing it around. I went to the outlets to get some clothes for my trip. And I have to tell you, I've been going to the outlets probably, since I've been here. Now I'm a lot closer. I live in Jacksonville, right? And go to the outlets in St. Augustine. I've never seen it that crowded before. I've never, ever seen it that crowded before since I've been going 12 years. If you're looking at restaurants are not emptying out. It's not, you're still seeing people spend money. They still have money. There's still trillions in the system. We're seeing liquidity finally coming out of the market. It's going to happen with the debt ceiling. We need to raise $1.2 trillion. That's money from the banks reserves. That's going to come out of the market. We'll see money come out of the market from student loan. 3-year pause. Now it's a lot of money. 43 million people, $400 a month. Discretionary spending. It's a lot of money. For 3 years, that was paused. Now you're seeing liquidity come out of the market, but there's still a lot of liquidity in the market. You think inflation's going away? It's not. So I'm hoping we get a really good number. Everybody's anticipating. Everyone's saying, no one said, hey, this number's going to be higher than expected. Because you see the data kind of coming out ahead of it. And healthcare has kind of been driving this too a little bit. I mean, the healthcare prices and whatever happened within healthcare have come down tremendously. I don't know whose healthcare prices came down. Mine certainly didn't. I don't know if yours did. But I think it was like a 20% decline in healthcare, whatever premiums or whatever it was. That was in last month's CPI year over year. And you're looking at the jobs number. Still strong. ADP number. I mean, holy cow, that was scary. Then we got a jobs number, kind of said, okay, we're okay. And you know what happens after jobs number, right? Every jobs number, we revise the previous month lower every last 5 months, right? So the data that we're getting for jobs really is shit because it's going to get revised lower, right? Because it's lagging data. But it's interesting because we have, 3.7%? The Fed's doing everything in their power to force a recession. Because we have inflation that's incredibly high at 5%. Even if we get a good number, it's still going to show the core is at 4.6, 4.7, which is incredibly high. If the target is 2%, if they are serious, if power is serious about 2%, we're not hitting that in 2025. We're going to have tightened conditions until then or until we have no inflation. The only way we have no inflation is if the market crashes. If we have a deep recession. The only way to cure it, look at the 80s. That's the playbook. Can't cure it by, we want a soft landing. You're not going to have a soft landing. It's the reason why you're seeing stocks go through the freaking roof where interest rates are surging, which usually never happens. Not to mention earnings are down this quarter coming in. Q2 starts next week. They're going to be down 7% year over year. It's a third straight quarter. They're going to be down year over year. Earnings recession, yet stocks are rising. You have the yield curve. I mean, the 2-year hit its highest level, I think I want to say, in decades. You have the inverted yield curve more inverted than it's been since the 80s. Right? I mean, shit like this doesn't happen. These disconnects don't happen unless there's something broken within the system. And it's going to come to a head, so be careful. Because what do we have? We have earnings season where you could say, well, Thursday it kicks off with Delta and Pepsi. But really, next week gets crazy. You have JP Morgan, Citi, BlackRock, United Health, Wells Fargo report on Monday. Banking stocks in there. So, by the way, JP Morgan got an upgrade today. With what? With a couple of days left, which is interesting. A couple of days before they're going to report. So when I look at that and I see JP Morgan get an upgrade, they got upgraded with Jefferies, by the way. They got 4 trading days before the report. You should expect some good news out of JP Morgan. I mean, it's rare to see upgrades on a stock just ahead of the earnings call, unless the analysts talk to management. We still talk to management, just they're not supposed to talk a few weeks before the quarter. But it's very rare to see upgrades on a stock just ahead of the earnings call, because if they're wrong and the stock crashes, you're really, really going to look like an idiot, because it's a coin flip. You could have a bad quarter and say, hey, next quarter is going to be bad. We raise our loan loss reserves, whatever. Maybe you don't meet estimates and the stock falls 5-7%. You're going to look like an idiot upgrading a couple days ahead when you could wait. You're better off waiting and the stock reports good numbers and goes up 10% and then you upgrade. That's fine. You're not going to lose your job for that. You can lose your job by upgrading just ahead and the stock crashes. And granted, JP Morgan's not that volatile, and you're not going to see a 10, 12% move in that stock up or down after earnings. But using the playbook that usually happens, as me being from Wall Street and understanding sell-side research and stuff like that, what they do, these sell-side analysts, if they like the company ahead of earnings, they usually don't upgrade, but they reiterate. They reiterate their buy rating. They reiterate it. I like this stock. I really, really like this stock. I really, 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 really like this stock. That's what they say. So Cowen reiterated Netflix as an outperform. Baird reiterate Tesla as an outperform. This is just from today. Morgan Stanley reiterate Microsoft as overrate. Reiterate. As Microsoft does what? They just cut 10,000 more jobs? Doesn't sound like a company that's rocketing, firing on all cylinders, trading at its highest valuation, get earnings declining year over year. Get AI, I get it. Huge trend. These guys going all in. These technology companies spending billions. I understand that. But do you really see, and I'll challenge you on this, when's the last market cycle that you saw when stocks were at all-time highs and the companies at all-time highs were laying off this many employees? I challenge you. Find a time for me, because I bet you won't find it. Companies don't lay off when their stocks are at all-time highs. They don't. They may cut costs and say, okay, we're at the top here and let's play a little conservative. They don't lay off employees as their stock is up 30%, 50%, in NVIDIA's case, 150% this year. I don't know if NVIDIA is laying off employees. I know Microsoft is. I know Google did. I know Netflix did. I mean, you're looking at the top 10 of those companies that represent what? 32% of the overall S&P 500 now? You're getting back to those over KeyBank again today. Reiterates NVIDIA as an overweight, but they raised their target at least to 550. To 550. NVIDIA's trading at 425 today. Like, if you want to put that in perspective, if they're right and it goes to 550, and that's usually a 6 to 12 month target, NVIDIA's market cap is going to increase by $300 billion. It's a $1 trillion company right now. $300 billion. I know we throw out billions and trillions, not a big deal. Let me put it in perspective for you. There's only 20 companies in the S&P 500 that have a market cap above $300 billion. And KeyBank believes that NVIDIA is going to add that much market cap over the next 6 to 12 months. You want to go even further here. These are the companies that have just $150 billion market cap. And they're saying that NVIDIA is going to grow by $300 billion. So twice these market caps. Disney, Wells Fargo, right, one of the largest banks, Schwab, Raytheon, biggest defense companies, Comcast, biggest cable companies, UPS, biggest delivery companies. They all have around $150 billion market cap. Total market cap for those companies. And KeyBank is like, that stock's going to go up more than $300 billion in market cap over the next 6 to 12 months. That's how insane things are getting. Okay, put things in perspective sometimes. And only 20 companies, look it up, have a market cap of more than $300 billion. They're expecting them to add that in a year in market cap, and they could. Let's see what AI, let's see if the spending continues, but to me, I'd be a little worried. You have 70% margins, you do have the best product, everybody's coming after you. Chip companies, AMD, Taiwan Semi, a lot of companies coming after you. Now that the biggest companies, when you have 70% margin, like Apple and Google, they're going to start making their own chips. Because it's a lot cheaper. Doesn't make sense when this is a commoditized business. Well, let's keep it to Taiwan Semi. Everybody uses them. Samsung, Intel, again, they have their own fab places and stuff like that, and I get it. But it makes no sense to jump into an industry where the margins are tight. When the margins are that big and you're sitting there with hundreds of billions of excess cash and free cash flow and tens of billions of dollars on your balance sheet right now when you're these big tech companies, it makes sense to say, okay, hey, let's allocate $25 billion to this over the next 4 years. Because at the end of the day, $25 billion for a company with $1 trillion or $3 trillion market cap like Apple is not a big deal. You can get that shit up and running 10 times faster if you get the right people in there, and you can because money talks. Also worth noting, one more note from today is Evercore. Again, sell-side shop I like a lot. They're good. They added Netflix as a tactical underperform ahead of the quarter. So expecting a sell-off after earnings because expectations are high. I got my ass kicked saying that about NVIDIA going up over 100% into the quarter where expectations were high. So I'm not telling you to act on that. but let's see how that plays out. And I'll give Evercore that credit because it's one of the only companies that's saying be careful right now. Be careful with these large cap tech companies, which is interesting because another tell, and I've been bringing up these tells in my newsletters where you had the technicals, you had the liquidity in your favor, but now technicals are breaking down. Come down Wall Street Unplugged Premium, also in my newsletters. It's going to come out Wednesday, and that's Curzio Research Advisory. So that's going to come out Wednesdays today. That's how crazy it is because I'm going away. I'm excited. I've been so busy, but that's going to be later today. Going to get a great pick. Awesome pick that I love a lot. It's huge upside potential. I love it. And people forgot about this name. It hasn't participated, even though it reported great numbers last time. It's in the right sector, in the hotel sector. It's fantastic. Great name. And also, I talked about these technical indicators rolling over last week in Curzio Venture Opportunities. So, as this is happening, we read all these buys on these technology companies. What do you think is happening? Billionaires have sold $9 billion so far this year of their stock. This includes insiders at Walmart, Salesforce, ton of insiders at NVIDIA. Just look at the sales. They're coming out like crazy. Okay, these guys, KeyBank think it's going to 550. These people who are selling NVIDIA obviously don't think that. Airbnb, Oracle, Moderna, Apollo, dumping. The billionaires in these companies are dumping. And when you look at insider buying, it's running at half at last year's level, which means what? Which means when you see insider buying, it means it's more of a big deal. Okay, when everyone's buying and insiders buying and you see the market come down, okay, fine. People are like, all right, we're cheap right now. When you see only a few companies, that's usually good. Where I'm seeing insider buying, small caps. And still 25% off the November 21 highs. Nobody cares about them. But anyway, these billionaires selling their stock should tell you something about where they believe, the smartest guys in the biggest companies, where they believe the market's heading over the next 6 months for the rest of the year. But look, Q2 earnings season starts next week. Then, the next 3 weeks, you're probably going to see 85% of the companies S&P 500 report. Please pay close attention. Daniel and I love this part of the market. We like going through these reports, digging through, seeing how they relate to other companies, the competition. I'm saying pay close attention because numbers, again, just like the last 3 quarters, and earnings have been down. There's going to be a third quarter in a row where earnings are down year over year. But numbers, again, have been revised lower into this earnings season. Not as bad as last earnings season, but about 2-3% going in. You can check FactSet. Again, that report's for free. FactSet earnings PDF. Pull up on Google. It's an awesome report. So I'm expecting companies to come out and beat like normal. 70-75%. Earnings are great. People don't care that they lowered. You're supposed to own $1 now. Even with Disney, Disney's estimates have come down by like 30-40%. And Disney's probably going to report and say, we beat earnings estimates. Of course, they've been revised 30% lower. Still a number. If you're reporting 70 cents, it still reflects in your PE. It still reflects in how fast your company is growing. You beat the estimate. Again, it's just an estimate that's the average from all these sell-side analysts. I'm expecting beats like the past few quarters. However, many companies are not just going to give Q3 guidance, which, by the way, Q3 is expected to be roughly flat year over year, just very, very small gains, less than 1%. But this is the quarter where they're going to report full year earnings likely for the rest of the year. And this is significant because if you're looking at this quarter, earnings are expected to fall 7%. So it's a trough right now, right? It's supposed to be the low point. So 7% for Q2. However, analysts are expecting earnings to surge by 8% in Q4. If we don't see a lot of these companies talk positive about the rest of the year, some of them are going to have to raise their estimates. We could see the market sell off, which we haven't seen over the 3 past earnings season, even though we saw earnings fall year over year in an earnings recession, which you normally don't see. We saw that as good news. It's not as bad as expected because, again, it's been manipulated. But we're seeing earnings growth slow. It's down year over year for the last 3 quarters. It's probably going to be fourth quarter, too. It's probably going to be 4 quarters in a row because next quarter is Q3. But for Q4, analysts are expecting an absolute surge in earnings. Do you see that? Because I think we're going to be more in the heart of recession with liquidity coming out of this market. And I think it's crazy for a company to report earnings and issue super positive guidance for the rest of this year. Because they are seeing trends with Walmart, Macy's. They said They expect the consumer to be weak. Not this week. Knight Swift just said that this lowered their estimates. This is much worse than expected. This is one of the largest truck companies in the world, deliver everything, all the goods. If you're looking at Taiwan exports, why is that a big deal? Well, they're down about 23% year over year. What comes from Taiwan? Taiwan semi, all the electronics, the parts come from there. They're down 23%. That should be up 23% based on where these stocks are trading and this boom that we're supposedly seeing. It's not being generated by the numbers. It's a multiple expansion, meaning that P's are rising even though earnings are not. It's very rare to happen, or for something like that to happen, when you have a rising interest rate environment, inverted yield curve, and the Fed doing everything in its power to pull trillions in liquidity out of this market through QT, quantitative tightening. So this is a monster outlook for Q4 with the majority of companies. Again, the majority of companies already padded their numbers by cutting costs over the past 2-3 quarters. They fired tons of employees, which includes the top 10 tech names. Again, they're responsible for 32% of the market in terms of weighting. The last time we hit this high was back at 32. I don't even think we hit 32. But I think it was November, and then this is November before the crash came down, right? We saw a crash in November, right? 21. And then before that was the dot-com era. But it's funny because even if you look at the last two instances, and the last one was only a couple of years ago, but if we look even back then, the weighting was almost the same. So it was a 30% weighting. I think it was more like 25, 27% weighting, right? Where these top companies represent of the S&P 500, but their profits were almost even. So if it was a 28, 27% weighting, it also accounted for 27% of the profits, of the total profits for the S&P 500. Now it's a 32% weighting, but yet these big 10 companies, these top 10 companies only account for 21% of the total earnings. Very big disconnect. But the markets are up sharply now. They're up sharply now, which changes the perception, meaning that companies aren't going to get away with shitty or conservative forecasts this time around. They got to be strong because that's what the market is expecting. Not so much this quarter. They're going to beat, and maybe some of them will say, well, Q3 looks good, but a lot of companies, a majority of them, are going to give you an outlook for the rest of the year. That's what everyone wants to hear. And that outlook better be very, very, very good, because if it's not, and if they're like, well, if any of these companies that are expecting a positive outlook warn, trust me on this, you're going to see 20% declines in one day for many of these names because they're expected to generate 8%, earnings supposed to grow 8% in one quarter. Okay, that's the average they usually grow for the past 10 years when we have 0% interest rates. It's 7%, 8%, 9% earnings growth year over year over year over year, almost like clockwork. Sometimes it went up 12%, sometimes it went down to 6%, but overall it's like 8%. You're expecting that in one quarter. That's very, very, very huge expectations in a market that you're seeing liquidity being drained now, money coming out of the market, consumers struggling more than ever. Pay close attention to this earnings season. It's going to be a big deal because I'm seeing tons of disconnects in companies and their share price. Okay, so for large caps, the disconnect is mostly companies trading at much higher valuations than they should be trading compared to the earnings growth. But for small caps, I'm seeing the opposite. Tons of names trading at significant discounts to their stock price. And we picked up, I can't tell you how many names we picked away at where they're up tremendously, and I'm very, 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 very happy for subscribers. Our average position is up over 90% of that portfolio. Last few months, we've seen 100% winners. We just saw a big winner in Rivian. We bought at 14 in May, and again, it was writing was on the wall. The quarter was great. The quarter was fantastic. Nobody cared. Nobody cared about small caps. Even watching TV, it's all about Microsoft and their layoffs and Google and AI and special reports on 60 Minutes. And it's all it is. It's NVIDIA. AI is going crazy. Amazon, Prime Day coming. Everything is large cap. That's what you want to see. Because guys like me who's paying attention to small caps like I've done all my life, you don't really see opportunities like this. Yes, it's going to be a tough economy, but these companies down 25%. They cut their costs. The big guys benefited, and so their stocks go up 30, 40, 50, 60%. Small caps have not. And Rivian's left for dead at 14 in May. It's over 24 less than 2 months, and I got news for you. If you think that company's done going higher, if you're looking at a valuation compared to Tesla, okay, and I'll do some quick math. And you may say this isn't apples to apples, but I think it's pretty close. Because if you look at Tesla and the amount of vehicles that they produced the first 6 months, I forgot the number. It's like 350 or something. Believe me, I've done the math on it. 350,000. And if you look at Rivian, it's around 45,000, which they were supposed to produce 50,000 by the end of this year. They're already at 45,000. They're going to go probably over 120,000, right? Because now they can scale. So you're looking at two companies that are in massive production mode, scale mode. Tesla's market cap is $880 billion. If you look at Rivian's market cap, it's about $23 billion. Yet, if you look at the vehicle production, it represents about 14%. Rivian's 45,000 is about 13.5%, 14% of the production of Tesla. So if you said it should be traded maybe 14% of the market cap of Tesla, you're looking at a company where Rivian should be trading at about $125 billion market cap that's trading at a $23 billion market cap. If you value it based on what Tesla's trading. And you can say, wait a minute, Frank, Tesla's got bigger gigafactories and things are great. You're right. Not apples to apples. But not too far off. Because I don't know if you realize this, Rivian sells trucks and SUVs. SUVs are now 53% of the market. Pickup trucks are like 12% of the market. That's what they're selling, and that's what they could scale right now. So you're looking at a company that, man, no more liquidity concerns. $11 billion in liquidity. They were burning a lot of cash, like $2 billion, $3 billion. Now they have nothing to worry about. They could raise money right now. People would die to get in to that company at a discounted price. But you're finally seeing that growth projection. When I look at a guy like Ron Barron, and it's incredible because here's a guy that saw Tesla where everyone questioned it. It was crazy. Yet you're looking at Rivian, who's at this point a lot quicker than Tesla got to, which took them 5 years. It took about half the time to get there in terms of ability to scale and having the technology in place. Not to mention, if you look at Ford and GM, they basically, I don't want to say throwing in a towel, but you could see it. EV sales quarter over quarter for both of those companies declined quarter over quarter. Remember we heard EVs, I'm going all in, everything. They're realizing. When you look at Rivian and you look at Tesla, they live, breathe. They wake up, 100% of the company is about EVs. That's it. GM and Ford? No. They got to run this business that generates a shitload of money and cash flow for them, but they're trying to push themselves into this market where they don't have the technology and they can't scale. Or you'd see a ton more cars, right? We heard 3 years are going to be able to scale. They can't. Same with Disney. If you look at Netflix, lives, breathes, their entire life is streaming. You look at Disney, they're trying to get into a business that's not their core business, that they can't compete. And companies are starting to realize that. Ford, good job. And GM, good job realizing that. Hey, you know what? I know the ESG people are going to go crazy, beat the shit out of us, but let's just dial it down a little bit because Ford's selling a ton of pickup trucks and GM sales like blew out, right? Blew out the numbers in terms of vehicle sales. Most of them are gas vehicles. Know what you're good at. Try to satisfy the politics, which you need to do. And that's when you'll see Disney turn around. When they say, all right, enough is streaming. We're not putting that much money into it. $700 million are going to lose this quarter in streaming. Constantly. Hulu's been around 15 years. Loses money. I think it's still losing $1 billion. Who constantly loses money. Again, under the Disney umbrella, they own a percentage of that. Let's see. Comcast owns a percentage as well, but let's see what happens there. But these are some of the names. Again, not cherry picking Rivian here. We have several names in small cap venture, Curzio venture opportunities that are up, and 7 of buys, really good names in this portfolio, but just names I'm seeing that have tremendous potential. They knew a recession's coming since everyone's saying it for over a year now, well over a year. They cut their costs. They positioned themselves. The only thing that didn't happen is their stock surged like everybody else. And now they're seeing business and getting their business right with a leaner business. They're seeing demand come back in their core markets, and that's where you see earnings explode because you're leaner than ever, your costs are lower than ever, and now your business you're generating is huge. It's easy to manage costs. It's easy to add. It's always hard to cut. That's why they say you should cut quick. So that's the position they're in. These are the companies I'm seeing in small cap world. So, quick note. So I've talked about this a lot. We have special offers. Subscribe to our premium products at 80% discount. It's going to close this week. We lower the price of our 3 premium service. That's Money Flow Trader, Crypto Intelligence, and yes, Curzio Venture Opportunities from $5,000 annually to $1,000 annually for the year. Again, only time I've ever done this. I also said the first 100 people that subscribe get a 10-minute phone call with me. I only have a few slots left for that. That 10-minute phone call is the highlight of my day. I have several, and certain days that I take them that are stretched out. The people that I talk to have been amazing. Just the information I get, the feedback I get, A person, a police officer, and entrepreneurs, several in the military, business owners. And one young investor sent me several AI programs that helped him build his social media presence, increased by 2,000%. And he's totally into AI and all these, and the 3 engines he sent me I never even heard of. Spoke to another person who said, "Hey Frank, thank you so much for Rivian." He's like, "I'm already in it." He goes, "I have two EVs." He's like, "I thought you hated EVs." I said, "I don't hate EVs. I hate the model that Ford and GM have with EVs." I said, "No problem with them. You want to buy them. It's just the numbers and the estimates that they're projecting on this is insane. It's not going to happen." So he owns a Mach-E, which I think is like someone's like the Mustang in Ford, and he bought the Rivian a few months ago. He goes, "Frank, the Rivian is the greatest thing ever." He goes, as soon as I took a ride in it, and he's like, "I bought the stock months ago." He's like, "You're dead right." Everyone that I hear that owns a Rivian loves it. You see the Wall Street Journal, someone report, unbelievable. The experience, the truck, it's exactly what they want, and they love the product, and now they can scale it. But that's really good information. I want to know. And I'm going to report back to you. There might be people that say, "Hey, you know what, Frank, the Rivian sucks. This is what." I'll report back to you. Again, it's about getting the right information. So speaking to you personally, that 10 minutes is really cool. Again, it's a highlight of my day. I love it. But the deal for those products ends this week. Thank you so much. A lot of people subscribed. I'm glad you subscribed because I think in almost every one of those newsletters, if you subscribed 3 weeks ago, it probably paid itself back already. Because there's 3 areas I said that I'm very, very high on. Again, I don't get paid by companies. If I'm not right, you're not going to subscribe again. But it's just an opportunity where I don't see all 3 products. It's very rare. You market 3 products. It's not the best marketing strategy. It's better to market one idea, focus on that idea. But these 3 products offer a lot of value for you right now. Because again, Money Flow Trader, I see a lot of companies missing earning estimates. Ginny's all over this. And you could easily, by buying long-dated puts, make a lot of money. Crypto Intelligence, the institutions will get in. They see outline the framework, which is great. They're going after a certain amount of companies, and the institutions are pouring in. Right? We went to 60,000 plus in Bitcoin without institutional support. Now, BlackRock, 10 trillion. Invesco just filed for the ETF. ARK, who's going to be the first, mark my words, to get the approval for a Bitcoin ETF. Fidelity, Wisdom Tree, and that's just the beginning. It's not just an ETF for Bitcoin. It's now an ETF for Ethereum. Then it's an ETF to manage 10 different cryptos, right, that are mostly proof of work and not proof of stake, which ICOs, which, again, the SEC finally has outlined which ones they're targeting as securities. So you have an outline. That's why you're seeing all of a sudden all these institutions getting in. And then you have small cap venture opportunities. Again, I just talked to you about the value I'm seeing there, and I'm very excited. Put my money in all 3 of these areas of the market. So, guys, that's it for me. I'm going to be out the next few days, going to Open Day Saratoga Raceway, my close friends. I have a lot of history there. I used to go when I was younger. We talked about that last year. My dad used to take me every single year because we had an upstate house for 15 years, still have the same house. My sister took it over, Stamford, New York. And it's awesome. We hang out and just got a lot of property up there. And then it's about an hour and a half, 45-minute ride. And Saratoga used to only be open for 4 weeks in August. And now I think it's 8 weeks. I think it rotates with, Aqueduct and Belmont for the New York tracks opened up. And just beautiful, guys. Beautiful, beautiful outdoor track. It's so beautiful. It's really, really nice. And it's known as the graveyard for favorites, which means you can win a lot of money, which I did last year. I won $4,500, which means this year I'm going to lose several $1,000s, but I'm going to enjoy myself. So I don't give myself time off. And these are friends that I know for decades and decades. I'm going to have a really good time. If you happen to be there, don't be shy. I may have a few beers in me. Feel free to make fun of me, but I'm a very happy drunk. But I'm going to have a lot of fun. And again, if you're around, you see me, please say hi. I love talking to you guys, subscribers. It's awesome. And that also means Wall Street Unplugged Premium is tomorrow. Daniel taking the reins. And he's going to have a new recommendation for Dollar Stock Club members. So definitely tune in. Right, guys? That's it for me. Have a wonderful week, wonderful weekend. I'll see you on the other side.